Tesla was as of late taken out of Wet Bramble's smartest bot list anyway. It actually made the highest point of the Securities Exchange expectations from examination like Dan Ives, who have truly been long-haul Tesla allies. As per him, the Cinderella ride is over for Tesla, and Musk presently needs to explore the organization through this dim, full-scale storm. Danos is a Tesla watcher and a major pundit of the organization. The stock financial backer has for quite a long time offered his viewpoint about how Tesla can flourish in the financial exchange. And presently, he is sounding a smidgen more hopeful on Tesla stock after a significant pounding to start off 2023. Hello folks, invite back to Tesla tomorrow. Dan Ives expressed in another client note that with the in excess of $5 profit power still hitting the stock, he actually doesn't really accept that this present time is the opportunity to abandon Tesla stock, adding that the stock is way oversold and fears of the obscure are around the bend. There have always been a few worries about the securities exchanges and Tesla's new conveyance. Mist additionally energized worries on the interest for its vehicles, which was a vital calculation sending shares spiraling 65 lower in 2022 as per Dan Ives, who's identified Tesla as the most groundbreaking organization possibly in the market alongside Apple. In any case, as far as what occurred with Elon Musk and Twitter has been a colossal shade in the stock, he anyway referred to the fact that there is a chance for Tesla to arrive at 4 or 5 trillion of potential market and open door over the course of the following 10 to 15 years. Is this truly conceivable? There are more subtleties to come in this video, yet before we get into it, on the off chance that you like how the situation is playing out, remember to hit that like button, buy in, and turn on notices to push exceptional on everything along with Tesla saw final quarter conveyances rise 18 successively of 405,000, missing agreement conjectures of 418,000. The figure carried Tesla's 2022 conveyances to 1.3 million units, up long-term over year, yet under the organization's direction for 50% following this outcome. J.P. Morgan examination Ryan Brinkman strikingly cut his benefit gauges and cost focus on Tesla anyway. Web variant else has Dan Ives accepts that this probably won't be the best activity for financial backers. Dan Ives has said that this is a crossroads year ahead for Tesla and will either lay the foundation for its next section of development or proceed with its slide from the highest point of the pit, with Musk driving the manner in which descending he anyway did truly repeat and beat rating and a $175 cost. Focus on Tesla conveyed more vehicles than any other time in 2022, yet wasn't sufficient to meet its own grand estimates. As per Ives, the EV market sent over 1.3 million vehicles to clients last year, a long-term over-year expansion from 2021. Indeed, even with the ceaseless increasing loan fees and reliable expansion, yet Web Bramble Tech examination Dan Ives said that the organization missed its 50-year development focus by a long distance. A few worries have done the trick about Tesla's interest in China, as per Ives. The significant concern now above for Tesla is the interest story, particularly out of China, and it's showing weighty breaks in the shield at the time that the EV contest is consistently expanding locally, with Neo-Bad Xipeng and others battling for a more modest pie, with the Chinese buyer debilitating. He composed with China addressing 40 or more of the worldwide development story for Tesla. This is a weighty worry for the money road, which will probably bring about more huge cost slices throughout the next few months to spike interest as a potential estimating tool. Ward happens to acquire a piece of the pie in a larger scale setting. Ives accepts that the request is beginning to break a piece for Tesla and that the organization should change costs. Cuts, most particularly in China, which remains a key to the development story. He further said that he stays stressed heading into an extremely overcast 2023 while talking about Musk's ideal Twitter bargain. I was exceptionally reproachful of Musk's turbulent authority on Twitter and out before the furious auction in Tesla that started somewhat recently. In light of this, the financial backer had eliminated the stock from his smartest bots list in November. Nevertheless, in that call, Tesla stock had declined around 43%. Tesla chief Elon Musk is as of now chipping away at a quest for another president for Twitter. The Tesla SpaceX and our Twitter chief affirmed his arrangements to step down at Twitter in her tweet in December, which expressed that he will leave as the president of Twitter when he finds somebody who can assume control over the gig. Musk added that in the wake of securing somebody for the position, he will just run the product and administration groups. In this regard, the tycoon's financial backer posted a casual survey inquiring as to whether he ought to step down as the organization's leader, and a greater part of the 17 million respondents cast a ballot for Musk to leave. Musk further expressed that he would keep the consequences of the survey anyway. He may be in somewhat of a pickle here, as Twitter surveys are straw surveys, which implies they are not tantamount to proficient general assessment research. Likewise, Musk is yet to maintain the aftereffects of the survey even after guaranteeing he would, so it's hazy to check whether he's really going to leave that position. Dan Ives has faith in Tesla's development for the next few years. As per him, Tesla will be the most troublesome innovation organization in the following 5 to 7 years. Their new income report demonstrated calculated and request issues. Albeit the organization's stock cost is as yet expected to go up after these outcomes are fixed by the stockmaster, there is a foreboding shadow for the general auto industry. And this should be visible from GM Portage, and investigating China we have NIO, and Shebang the new Rivian review was bad according to a PR viewpoint, and Elon Musk jokes have made a few financial backers become depleted, while Road is expecting Tesla conveyance fills in the 35 to 40 territory for 2023, which might be too high in a momentum monetary climate. As per Ives, yet the examiner stays certain that the organization can make something happen, or whether any potential downturn. He likewise contended that administration simply has to reset financial backers' assumptions with more reasonable conveyance and monetary focuses for the following year. Even the most bullish of experts recognize that Tesla is confronting transient interest issues in battling to meet its hopeful figures, yet Money Road is divided on the monster's future possibilities. Thus, that is still a ton of good to anticipate 10 hours hold a $175 cost. Focusing on Tesla shares, which address around a 60 offer cost bounce, he contends that a ton of the new terrible news about conveyances is as of now valued into the stock, and that the electric vehicle boom is still in the beginning phases of a significant development cycle because of interest challenges. Numerous Tesla financial backers are worried about the organization's high market valuation, but Money Road expects a 35 to 40% expansion in Tesla conveyances in 2023. Tesla is frequently contrasted with huge car organizations like Toyota, but the vehicle creator has developed past most of its rivals, particularly as far as income age is concerned. Tesla procured 8 times the amount of benefit per vehicle as Toyota engine in the July-September quarter of 2022, regardless of being beat more than 7 to 1. This put the American electric vehicle producer at a heading quarterly net benefit, interestingly since opening up to the world in 2010. Tesla's prosperity stems generally from the productivity of every one of its vehicles, and Toyota saw 2.62 million vehicles in the quarter, 7.6 times as many as Tesla's 344,000. Yet its net benefit per vehicle came in at around $1,200. Only 1/8 of Tesla's 9570 Tesla is accepted to come out on top, as far as net benefit per vehicle sold, even in front of players like Mercedes-Benz. While these vehicle brands are the two monsters of the car business, they vary fundamentally in business system and valuation. Toyota's principal strength is its minimal expense, great assembly, and Tesla's primary assets are its appealing plans in battery and independent driving. Innovations at Toyota are transformative, while Tesla is progressive. Although these may seem like simple business methodologies, they go far to influence the business direction. Dan Ives is hopeful that Tesla can make something happen and endure any future downturn. He guarantees that Tesla's administration just has to reset financial backers' assumptions with more reasonable conveyance and monetary focuses for the new year, as per his must necessities to spread out a more safe number to hit this unsteady scenery. And that is the thing he does, do you think? Tesla stock is bit by bit raising a ruckus around town. Let us in on it down underneath, and remember to let us know your valuation of Tesla. Keeping in mind that he's still here, if you have any desire to know more about what Tesla's been doing over the most recent couple of days, feel free to tap on this next video on your screen. See you there.